Welcome back, ladies and gentlemen, and thank you for remaining with us. We are going to have Mr. Joseph very soon, but before we have him, we just wanted to take you through some of the things that are of concern, especially with the government securities here in Uganda. Now, according to reports from the Capital Markets Authority in the second quarter of 2022, the Bank of Uganda issued about 2.6 trillion Ugandan shillings worth of treasury bonds and treasury bills. And during this quarter, we registered a 16.6% decline in the value of the treasury bonds and treasury bills that were issued. This is, of course, comparing to the much higher 3.1 trillion Ugandan shillings within this first quarter of 2022. And this decrease, according to the Capital Markets Authority, is attributed to the decline or the rejection of bids by the Bank of Uganda, among other things, deemed to be at a highly priced interest rate. Now, when you look at the other quarters that we've had, at least for the past 1 year, the second quarter of 2021 had a total of 2.85 trillion Ugandan shillings. The third quarter of 2021 had about 3.318 trillion shillings. Then in the fourth quarter of 2021, we had about 2.7 trillion shillings. In the first quarter, like I've said already, in the first quarter of 2022, we had about 3.1 trillion. And in the second quarter, we had a decline to approximately 2.6 trillion Ugandan shillings. What was the cause of this decline? This is the lowest we've had, at least within the last 1 year, the lowest issuance of the treasury bonds and the treasury bills for us here by Bank of Uganda. And when you look at the treasury bonds yields, there are still a decline in the annualized, when you look at the annualized basis. Now, for example, there was a decline in the 2-year bond, that is from about 12.3% from the annualized interest of 12.3% to about 9.9% within the second quarter. And then in also the 3-year bond, there was a decline from 12.8% to about 12.4%, and that is for the second quarter. And then when you look at the 5-year bond, there was a decline from 15.1% to about 14.5% during this second quarter of the year 2022. And on the other hand, when you look at the 10-year and the 15-year bonds, they rose from an average of 13.7% and 14.4% to about 13.8% and 14.5% respectively in the second quarter for this period. The question here is, how is government, what are the reasons behind government's reduction in the issuance of treasury bonds and treasury bills? Is government finding other ways of financing the budget? Are we looking at more concessional loans that are being taken abroad? Are we looking at Eurobonds? What are some of the things government is doing to raise money that have led to this decline? Now, Altex East Africa was able to list, at least for this particular period, on their Twitter handle, they listed several bonds that were issued by the exchange. Altex, like I mentioned, is a private exchange that is, of course, under the Altex Africa Group. And here in Uganda, the CEO of this exchange is Mr. Joseph Chitamirike, who is going to be joining us very soon. Now, in May 2027, we had a 14.5 to 15.2%. We are having a bond there listed on the Altex exchange between 14.2 to 15.2%. And then on the 20, we have also another bond listed. These are issuings that were put on the formal or official website for Altex and also on their Twitter handle. There is a bond up to 2031 that is at 15.15 to 15.85%. There's also a bond that is maturing in 2034 that is with an interest rate of about 15.3 to 16%. We also have a bond maturing in 2040 that is between 16.4% to 17.1%. These are bonds that are listed on this private exchange, and we want some answers on this. First of all, how are these rates? Of course, how do they come up with these rates as an exchange? Are they the same rates as Bank of Uganda? Are they the same rates as other primary dealers within the market? What are some of the critical advantages of investing with Altex rather than maybe going through a primary dealer, or maybe going through the Uganda Securities Exchange? All this we're going to get and more with Mr. Joseph. But for starters, where do we, when we talk about the treasury bonds and treasury bills, many people usually, most people probably don't get exactly the point. They probably sometimes understand that these are instruments, maybe these are instruments for rich people, people with billions of money to invest. But well, what are these instruments, and how can you and I be able to participate in their trade? Now, treasury bills are structured in three maturities. Remember, we talk about lending, and this is lending to government within either the short term or the long term. Now, the treasury bills account for the short term lending. And why we call them treasury bills? Because these are to government. And when we are talking about corporate bodies or companies borrowing for a short term, we have what we call a commercial paper. This commercial paper is also a short-term debt, or a short-term debt that is also transferable, meaning you can transfer it from one investor to another. Now, when we talk about the treasury bills, we're talking about those short-term instruments or debt instruments that can be transferred from one individual or organization to another. And we have three structures for these treasury bills. We have the 91 days treasury bills. We have the 182 treasury bills. Those are 182 days treasury bills. We also have the 164 day treasury bills. And these treasury bills, as I mentioned, are short-term instruments or securities that are less than a year. These securities are issued at a discount, and currently they account for less than half of the total outstanding securities. That is to say, government securities that are yet to mature. Now, the treasury bonds are the longer term instruments, still transferable from one individual or one organization to another, but these are long term. And these are quite much newer on the market, newer than the treasury bills just introduced recently. And they have maturities of 2 years, 3 years, 5 years, 10 years, 15 years, and most recently we have now a 20-year bond here in Uganda. In Kenya, of course, it's a different story. They still have up to 30 years maturity bonds. Those are bonds that take up to 30 years, meaning you can lend government for over 30 years. And so, why are these important? These were introduced mainly to extend the yield curve and also to mitigate the cost of sterilization. Now, the legal basis of issuing securities is based on the Treasury Bills Act in 1969 and also the Public Finance and Accountability Act 2003. This is the basic knowledge you need to know about this bond or the bills and how they really operate. And who can invest in these? Definitely very simple. Number one, you have commercial banks. If you're a commercial bank out there, you are a direct participant in these. You can be a viable candidate for lending government. If you are an insurance companies are also viable investors. We also have individual companies, independent private companies owned by individuals. or owned by a group of individuals. We also have the government agencies. If you're a government agency out there, you can still be one of the investors in these instruments. Pension funds, this is very interesting. Pension funds are some of the eligible investors within the treasury bond or the debt markets, as well as the treasury bills, that is the money markets. Now, pension funds like NSSF or National Social Security Fund are some of the biggest investors because they get a lot of money from the public. Public keeps on saving with these funds. Of course, every employee is supposed to put money aside at least for NSSF every once in a while, at least monthly. And this money does not sit at NSSF doing nothing. They use this money to invest in some of these instruments and definitely get you an interest on that saving. This is the way the pension funds are able to work. We have also other pension funds like Casita, like the Makerere Fund, and so many others. And these are all regulated by the Uganda Retirement Benefits Regulatory Authority, UBRA. Now, we also have individuals who can invest. Individuals aged 18 years and above. Below 18, we might have to wait a little longer. But as long as you're 18 years and above, you're still a viable investor. If you're out there, you have a cake business, you are still a student at campus, you are probably a young adult starting out to work, you're still a viable investor. You only need 100,000 and that's it. And you can start your investment journey. We also have offshore investors, and these are individuals or persons or corporate entities as well through a local agent. So even if you're abroad, you're not here in Uganda, you can still have an investment within the debt instruments as well. Now, let's look at some of the advantages of investing in some of these instruments. Number one is that they offer a competitive advantage with a competitive rate of return. When you look at very many businesses in Uganda, everyone is looking for a return. When you start a business for trading, maybe clothes in Chikubo, maybe trading stationery, you're looking at getting at least a coin on every book you're selling and every shirt you're selling. Still, in these instruments, people look at the rate of return. They have a quite competitive rate of return compared to many businesses, compared to many other financial market segments. They also, and most importantly, this is the most important, they are risk-free investments, meaning they are 100% secure. You're secure that you will get back the money you have invested within the period of maturity of that particular instrument. So these are some of the advantages. Number one, very competitive rate of return. Number two, the risk. There's at least zero risk because government is the body you're lending and it will never default. And in case it does, there are ways to actually be able to go around it. And so these are risk-free investment compared to, for example, the equities market where we have demand and supply, pushing the share prices either upwards or downwards. But these are stable. You are sure that you're going to get this return. You're sure you're going to get this initial investment. The other advantage, of course, is the saving mechanism they provide. Of course, as you save, you need some motivation that, when I'm saving, I'll get this in return. It's natural, it's human. So there are ways of actually improving our investment. There are ways of getting us to push ourselves to save. They're also very liquid. In other words, you don't have to wait for the 30 years. If you've bought a 30-year bond in Kenya and you feel like you're fed up, it's okay. You can transfer that particular bond to another person, and that person can still transfer it to another person. It's without limitation. Even if you buy it today and sell it tomorrow, absolutely no problem. So they are very liquid. You can get back your money in the shortest time possible. Of course, the settlement time is about 1 day or 2 days of working. Depends on, of course, who you're working with, the primary dealer in this case, or the exchange with which you're dealing with. But they're very liquid assets compared to many other assets here in the financial markets world. They can be pledged as collateral for obtaining loans or for borrowing. Very interestingly, you can still get a housing loan, maybe a mortgage loan. You can still get yourself a salary loan. You can get so many other loans based on these treasury bonds and treasury bills. By simply getting yourself one bill or a bond, it can be a collateral for you to obtain a loan from a bank. That's the beauty of the government securities. Now, the investment procedure in summary. If you are looking to invest in these markets, what should you have? I've already mentioned, if you are an individual, you must be 18 years and above with the personal identification, right? And so this is one of the qualifications you need. However, there are some forms to fill and things to do before, of course, you are able to get this security. Number one is that all investors participating in the treasury bonds and treasury bills transactions must be registered on the Central Securities Depository System. Now, like the Securities Central Depository System on the equities market, we also have a Central Securities Depository System in the debt market. And of course, there's something that, of course, is coming up to see that we merge these two accounts, that is the CSD and SCD. But at the moment, they're separate. So if you are going to buy yourself a bond or a bill, make sure you have opened a CSD account. And this can be opened through the primary dealers, and these are all available on the Bank of Uganda website. At the moment, in Uganda, we have 8 primary dealers. I can mention a few of them, including Absa Bank, Bank of Baroda, DFCU, Centenary Bank, Stanbic Bank, Standard Chartered Bank, United Bank for Africa, that is UBA, and so many others. 8 of them, they are on the Bank of Uganda website. When you approach these, they will be able to help you open a CSD account. Now, currently, those are some of the people that are participating in the debt instruments market. However, now, what you need to know are the kinds of investors. We've mentioned already that we can have individuals, insurance companies, we can have government agencies, and so many others. But what are the 2 main categories of investors? We have what we call competitive investors and the non-competitive investors. When it comes to the competitive investors, these are investors who dictate or who have a say on the rate of return. These bonds or these instruments are usually auctioned by Bank of Uganda, and bidders place their bids at a certain rate of return. Now, the people who who have a say in the rate of return are called the competitive bidders, and these are people who have investments worth 200 million or more. These are called competitive investors. You're supposed to have actually more than 200 million. That is one thing you should know. Now, the rest of the other the other investors are called non-competitive investors, and these are investors with bids ranging from 100,000 to 200 million. And of course, the units are 100,000, 200,000, 300,000. There is no in between. You cannot invest, for example, let's say 150,000, unless otherwise, but you cannot do that, okay? And so we have that category of investors. This one doesn't have a say, usually, when it comes to the rate of return. They just place their bids and go with the rate of return that is agreed upon by the Bank of Uganda and the competitive investors. Now, all bids, both competitive and non-competitive, must be submitted through a commercial bank who appoints a primary dealer. Now, a primary dealer are the other 8 banks I've mentioned, but you can go through any of the other commercial banks so long as they can access a primary dealer, and they will be able to settle for you that claim. Now, primary dealers are well-capitalized financial institutions that have an undertaking with the central bank to facilitate the open market operations, as well as be a conduit of market making. There are 8 of them. Like I mentioned, we have Stanbic, we have Standard Chartered, we have DFCU, Absa Bank, and then Bank of Baroda, Centenary Bank, and UBA Bank, and as well as Housing Finance Bank at the moment. Now, when you look at the bids that are captured on the CSD accounts by the commercial banks for themselves and for their clients, the auction is carried out at the Bank of Uganda. Now, that's simply the procedure through which we have these treasury bonds and treasury bills availed to us. Now, Alltex came out with an easy way to access these markets. You can now simply dial *292# using your MTN line to be able to subscribe to Alltex and also get to access the wide range of securities across East Africa. We're going to take a quick breather and we'll be right back. Stay with us.